Hi, Michael Yardney here. We're almost at the end of the year, and I can see that 2011 is going to go down as a year that probably is going to be remembered as one of civil unrest. Now, it started with a street vendor setting fire to himself in Tunisia at the end of, well, just over 12 months ago now, wasn't it? And that moved on to civil unrest in a number of countries in the Middle East. But then there were riots in London, and more recently there have been protests all around the world. And the last ones are against what they call the rich 1%. Now, these protesters say that they're opposed to the fundamental inequality in society, social, economic, ecological, and they want to change the way our society is structured and run so that the vast majority of people, the 99%, have their interests accounted for, their voices heard, their needs represented. As many of these protesters can claim our society is run for and by the 1%, I found it interesting that recently the Australian Financial Review ran an article explaining what it takes to join this exclusive 1% club. Before I explain to you what it takes to get into that famous 1% club, I'm going to just mention to you my book, Thriving, Not Just Surviving in Changing Times. While last year was seen as a year of unrest, I think next year is going to be a year of economic turmoil. And that's where this great book is going to help you sift through and understand how to thrive, not just survive in changing times. Brian Tracy, the great author, said about this book that it's your roadmap to see you through the difficult changing times ahead. So click on the link below and get your copy now. It's going to make great reading over the holiday season. Okay, back to what it takes to make it into the rich 1% club. Apparently in Australia, it takes assets of about $11.2 million to be amongst the richest 1% of Australians, 8.4 million households. Now, that top 1% has a lazy $1 million or so kicking around in cash, or its equivalent, according to the Financial Review. That compares with just less than $120,000 for the top 20% of households. The average value of cars owned by the top 1% is $84,000, compared with a $32,000 car for the top 20%. And their financial security is covered by about $1.4 million in superannuation, more than double the super held by the wealthiest 20%. Now, those who make it into the top 1% of the rich people tend to have extensive share portfolios, and they tend to be worth around $450,000, and many of them have got businesses valued at something like an average price of $3 million. These figures that the Financial Review quoted are in line with what Merrill Lynch Capgemini's High Net Worth Individual report showed. It found that 80% of this club made their wealth through business. But that doesn't mean the wealthiest Australians don't like property. They do, and they're amongst the keenest property owners in the world. If you are in one of those 84,000 households that make up the 1%, you're likely to be living in a house worth on average about $1.9 million and own other property holdings worth over $3 million. Now, clearly there's a wide gap between the top 1% and the average Australian. And figures from the Australian Bureau of Statistics show that Australia's richest households are expanding their wealth 3 times faster than the poorest groups. And many are using properties to leverage their wealth. Now, I wrote about that in a recent market commentary. But I'd like to give you a different perspective today. Now, I don't want to diminish or belittle anyone's hardship. Becoming unemployed or not being able to keep up your mortgage payments aren't just financial problems. They're social and emotional problems that strike at your self-worth. But things always have to be kept in perspective. Some really interesting numbers emerge when you expand your view and look at what the richest 1% of the entire world are like. It's no secret that Australia is amongst the richest nations on earth. So how much do you need to be amongst the top 1% in the world? According to an article in Motley Fool, the answer is about $34,000 US. This article explains that in his book, The Haves and Have-Nots, World Bank economist Branko Milankovic shared that to be in the top half of the globe, you need to earn just $1,225 a year. To be included in the top 20% of income earners in the world, all you need is a salary of around $5,000 US a year. To be in the top 10%, you need to earn US about $12,000 a year. And to be included in the top 1% of the world requires an annual income of $70,000. Dig even deeper and the figures become inconceivable. According to the United Nations, nearly half the world's population, that's about 2.8 billion people, earn less than $2 a day. According to the World Bank, 95% of those living in the developing world earn less than $10 a day. When you consider the context of the entire world, it means that the Australians we consider poor are amongst the world's richest people. A new report from Credit Suisse Global Wealth has revealed that what many of us Aussies already know, that we are indeed living in the lucky country. In terms of average wealth per adult in 2011, Switzerland, Australia and Norway are the three richest nations in the world, with the average Australian's worth being close to about $221,000, which is 4 times more than that amount boasted by each US adult. And the proportions of Australian adults who can claim to be worth more than $100,000 is 8 times the global average. In short, most of those occupying Wall Street and most of those occupying Melbourne, Sydney and Brisbane would be considered extraordinarily wealthy by much of the world. Many of those protesting the 1% are, in fact, the 1%. Apart from having amongst the highest incomes in the world and the second best lifestyle, the Australian Bureau of Statistics advises we also have one of the highest life expectancies on the planet. Since 1990, 6 years has been added to the life expectancy of Australian males and 4 years has been added to the life expectancy for women. Now, let me remind you, in Australia, anyone can join the 1% club. But the protesters in Australia should remember that we live in this lucky country, a country where anyone can join that wealthy club, a country of opportunities where anyone can virtually make it into the BRW Rich 200 list. Now clearly that's not possible in many other parts of the world. If you go back and have a look at this year's Rich 200 list, while 17% of those in that list inherited some of their fortune, most were self-made successes, some coming from working class backgrounds. And there's no use complaining about the school you went to, because attending a private school or having an elite education is clearly not a prerequisite to joining Australia's wealthy. While some of those in the Rich 200 Club forged important networks at school, many went to public schools. Others didn't even finish high school. In fact, less than half of those in the Rich 200 list have got a tertiary qualification. And don't say it's too late, because you're never too young and you're never too old. The youngest member of this year's BRW Rich 200 list is aged 35 and has an estimated wealth of $1 billion, which is even more than the oldest member, who is aged 92 and has an accumulated wealth of $289 million. Okay, look, just to make things clear, before I receive a flood of negative comments, this commentary isn't to belittle the protesters' message. I see some merits in some of the arguments the Occupy protesters argue about. And I'm definitely not against protesting. I grew up in an age of protests against the Vietnam War. Needless to say, I can understand why people would be upset when many of the top 1% are perceived to earn their income unjustifiably, being paid by big corporations that in some cases have run themselves into the ground and then being bailed out by the government. Just doesn't sound right, does it? Nor does a tax system where the wealthy seem to avoid tax and the poor seem to pay a disproportionate amount. Look, it's hard to argue with that logic. Remember, I'm not having a go at the protesters. I'm just offering another perspective and reminding them that even though our system has lots of faults, it has created more prosperity, even for the lowest 1%, than most of the world can comprehend. In future updates, I'm going to keep you informed on how you can take advantage of the changes that are happening in our property markets. Maybe you can reach that top 1%. But it's probably appropriate to remind you that in changing times like we're experiencing, no one can help you quite like the independent property investment strategists at Metropole. I'm very proud of our team because once again they've won 3 awards from the readers of Your Investment Property magazine: Best Mortgage Broker, Best Buyer's Agent and Best Property Investment Strategist. So Metropole has taken the pool of prizes, again showing how our independent advice has helped more Australians than anyone else. Remember, our multi-award winning team have no properties to sell, so their advice is independent and unbiased. If you want to find out a bit more about what's happening in your local markets and what our research suggests is in store, why don't you come along to a free property briefing? We'll be having one more before Christmas in Melbourne, Brisbane and Sydney, and with our associates in Perth. Just click on the link below and reserve your place. Now, there's so much happening in the property markets nowadays. I'm going to keep you updated with regular, short, daily blogs. That's a totally different subscription to my normal newsletter. So if you want to keep up to date with my blogs, just click on the link up top there and you'll get my regular daily updates. Have a great week. Make it a great week. This is Michael Yardney.